Because Khemani, what is going on with the private banking space? You know, one side you have Yes Bank, which has come out with good set of numbers in a tough environment despite RBI compulsions. Axis Bank, which was supposed to be the jewel in the crown for a lot of private banking watchers, they continue to disappoint. Earlier we would take a call on banking, then we started taking a call on private versus PSUs, and now within private banking also the space is getting sliced and diced.
Hi Nikunj, I think there has always been many cuts to the bank. One is private and PSU, and within private also corporate facing bank and non-corporate facing bank, or that kind of cut has been around for some time. The very fact that I think banks like ICICI Bank and Axis Bank, who have a very large corporate oriented exposure and a lot of legacy oriented exposure, which has been under stress for last 4 or 5 years, obviously market has been dealing with this set very differently versus the set which has sort of no legacy, has a lot more known project kind of or project corporate kind of exposure, whether it is Yes Bank or HDFC Bank or IndusInd Bank, who have been more participating in MSME, working capital loan, and or related areas which are not in a problem. So I think this second set of the banks have been very well liked by the market, and has been doing very well. They have been delivering shareholder value, they have been delivering good returns, and I think they are also commanding good premium. Now the hope in the first set is that whenever market has been hoping that the pain would be behind, and every time we see that this is likely to be behind, we have been having some other issue cropping up, and this is where this whole confusion comes about. There's no doubt that banks like ICICI Bank, Axis Bank, and in this set, they are good franchise. They have a very large retail liability as well as the asset side franchise, and eventually as the pain gets over, they will also do well, whether it is issues related to leadership or related to asset quality. As and when that gets over, I am sure they will come out well, do well. But I think only the question is that when and how long it will take. And so far, this segment has been disappointing markets and investors for quite a long period of time, and that is the reason this impatience comes. But I do believe that definitely there is a potential. There is a way forward in this segment, because this is not a broken segment. Still, these are the issues which can be fixed. By and large, provision has been done, and economics recovery in the can take care of a lot of other pain which is there in the asset side. And once the leadership issues as these banks are facing gets done, I think you will see them coming about. But till then, I think we'll have to be patient. We'll have to give time.
Would you extend that argument for PSU banks as well, Vikas? Because with the whole recapitalization program last December that was introduced in November, again there was a ray of hope that things could turn around. Or is this classification of conviction only for some of these ailing private sector banks?
The PSU bank has little bit more problem. PSU banks has one obviously asset quality problem, which is right now a current problem. Also, there's a structural problem of the governance model. I mean, capital adequacy is only you can, let's say, come out from a particular problem. But I think PSU banks suffer from, structural kind of governance problem, talent problem, how they will kind of go from here, whether it is appointment of their managements, intervention, assuming that there is no intervention, but still they need a huge amount of talent pool, and they are subject to a lot of public scrutiny. So I think the confidence, risk taking capability in these institutions would be very limited. So I would seriously doubt that, and they have been losing market share to the private sector, and I don't see that receding at all. So eventually I think we will see this privatization of the market share from public to private, like it has happened whether it in aviation, asset management, or telecom. You will see this segment slowly becoming smaller and irrelevant, but within that also one or two institutions would definitely come out, stand out, where it is not as broken. But I would say you can't look at there will be one or two as probably names which one could really bet on, but there is a structural problem, and that needs to be addressed before anything can be done. Having said that, there might be a trade, there might be sort of as and when the economic recovery happens, asset quality would definitely improve, and that trade could play out. But structurally, if I have to play, I would definitely play more on the private sector, which is gaining market share.
Because it's hard to imagine that why markets are going higher when costs of capital is going to move higher and crude is sitting at $75. Do you think somewhere there is some complacency? Nobody's talking about macros, the impact crude will have, and the implications it will have on inflation?
Absolutely. I think we are in a very interesting phase of the market when there is a reasonably good tug of war happening between macros and micros. One side we are seeing micros improving, corporate earnings are gaining, capex cycle is picking up. So I think those things are slowly improving. Other side, we are seeing some of the macro factors you mentioned, whether it's oil price, interest rates, inflation, rupee, all those things are sort of coming about. Surprisingly, even international markets are reasonably holding on. Even international markets, economic recovery is reasonably strong, but some of those macros around the cost of capital are and some of the political issues are the point of worry. And I think the markets are right now, kind of between these. That's the reason you see, a lack of conviction by the market, in the market moves. But at the same time, I think there's a huge amount of, some time ago, there was a huge amount of skepticism. So I think probably that was overdone. So I think you will see this kind of sentiment continuing. Honestly speaking, one does not know how, market will pan out in course of this year, which factor will overplay. It all depends on, when markets are in this kind of condition, even a small fragile, event can kind of create a move either side, more on the downside. So one has to be really careful. But the good comforting part at this point in time, as far as the Indian economy is concerned, that the economic recovery is happening. Corporate earnings, which we've been waiting for long, are looking upwards, and that will always give some sort of comfort, downside protection to the market, and that is my biggest hope as far as, and hence, you should be comfortable even if there's short-term downside. From a medium-term to long-term perspective, you should be, happy to kind of take equity exposure, in this kind of markets as well.
My next couple of questions very simple. We won't get into a market opinion or your reaction to news. What I'm sure we both have observed over the years is that if you buy a good business when it is going through a cyclical downturn rather than a structural downturn, you will always make money, because when business will come back, stock prices will also come back. Give me an example of 1, 2, maybe 3 businesses which to your mind are going through a temporary cyclical downturn and markets are writing it off.
I think there are two kinds of example we can give. One is where there's a complete contrarianism and there's no hope on the horizon. The second one is there is a uptick happening. I mean, there's a contrarianism, but still uptick is on the horizon. You can see things are changing. In the first category, I believe that in India, wherever there's incrementally putting together large capex would be very, very difficult. I don't think any corporate house or many corporate house would have capability to take the risk of putting 5,000, 10,000 crores of capex at a go, given the kind of current financing environment or banking environment. If this is the case, as the economic recovery happens, demand will go up, but your new capex, new supply would be very, very limited to come by. And this will make the existing capacities very, very valuable. And I feel that, and there are lots of such sectors, where you are finding this kind of capacity, available. Steel was one classic example. We saw recovery and how the returns have come by. I do believe that thermal power is a one segment. Still, there are huge capacities available. Underutilization is there. Nobody looking at that sector. But there will be a time in next 1 year, 2 years, 3 years, where these will be similar to what steel was, because I don't think any more capacity is coming up. And as the economy grows, power demand will have to be there. There's no question on my mind on that. And that as and when that supply happens, you will see these assets becoming much more valuable than what they are today. The second segment which I mentioned was, I think around capital expenditure around the industrial capital expenditure is just picking up. There are lots of companies, especially engineering projects, where capacity utilization is about 30, 40, 50% and long way to go. And this is also, by the way, a global cycle. Today, if you were to place an order for a large industrial capex internationally, if earlier the delivery schedule was 3 to 6 months, it has gone already to 9 to 12 months, and that is only elongating. This means that lots of engineering companies which are getting leverage on private capex, industrial capex, will start benefiting a lot. Their margins will go up, operating leverage will come about, and I think you will see this segment, where already recovery started happening, but yet market has not fully factored in. You will see there is 3 to 4, 5 years cycle ahead of us, which will pan out, and I think that's the one segment I would again bet. So these are two segments, one with little bit of hope around, other is one, currently no hope, but the hypothesis will have to play out.
As the market matures, we have more companies which are hitting the $100 billion market cap club. So TCS has done it. It's inaugurated the club, and now Reliance is on the way. what would that indicate to you? Potential for further re-rating from here, or a top in terms of valuations for these businesses?
See, I think, in my opinion, valuation will move always in a narrow range depending on the economic cycle. But most important thing to watch out is that how the economy is growing and how these companies are growing, taking part in that. I mean, look at, in 1991, we had $250 billion of GDP. Today, what we are, and I think index has moved up. 2003, I remember clearly State Bank of India, which is, around 230, 240 rupees today. After all those things, still is far higher. The corporate earnings have gone up. So I think what we have to see, or look at HDFC Bank or SDFC, the corporate earnings have to, have multiplied manyfold than what they were. So I think as we move from here, $2.5 to $5 trillion of GDP in next 7-8 years, you will see many multiplier or multiplied corporate earnings from here what they are today in many of these institutions. The companies will keep on growing. If 15 to 20% earnings growth or more if you take, they will become much larger than they are. So I think in that sense, that $100 billion mark is just a milestone. It is not the end game. I think we will have many more companies, at least in my opinion, in next 7-8 years, at least 10 to 15 companies which will be crossing this kind of mark. And because it is part of any growth of any economy. If our GDP is going to be $5 trillion, if market cap is anywhere between $4 to $6 trillion, you will have to have larger corporations with this kind of market. So the key thing is not to really worry about the valuation re-rating. Of course, that will be always a narrow range. But key thing is that what kind of quantum jump can happen on the earnings of the corporations, and again to identify those kind of sectors, segments and corporations who could take benefit of this economic recovery and be part of this big club.
Okay. 3504 for TCS. Reliance is now moving towards that $100 billion mark. I liked your analogy, Tanvir, when you said that for Bollywood movies, 100 crore. For Indian Indian listed companies, now $100 billion. That really could be the new normal.
Yeah.
But the thing is, after Reliance and TCS, if you look at HDFC Bank or HDFC Group, for that matter, even Bajaj Finance and all, then you'll have to really wait for the third company to be part of $100 billion.
Yeah. But I think that will only be a matter of time, right? Once two companies make it, then as the momentum picks up for the market, unless there's a big correction.
My limited view is that if you look at the birth of $100 billion companies which have happened globally, it's not happening in the Chevrons or the GEs, or it's not happening in steel companies. It's actually happening in companies which have disrupted, innovated, they're asset light, and they're doing something which is, they're doing businesses which never existed 10-15 years ago. Amazon never existed 15 years ago in terms of importance. Apple, we know it's been a boom and a bust and a comeback by Apple. Alphabet, the story is not more than 20 years old. So a lot of these businesses, Netflix, some of the businesses which are $100 billion plus, or the new $100 billion entrants in US, are not typically part of the old economy club, so to speak. And a lot of these companies which are now nearing $100 billion businesses in India, they are mature businesses. TCS is mature, Reliance is mature, HUL is mature, HDFC Bank, well, I don't know how things would change for the banking sector per se. So Vikas, if some viewer has to, let's say, take a cue from our today's conversation, the viewer is only interested in one or two things: what to buy, when to sell, how much to buy. Basically, paisa kaisa banane ka. So what would be your suggestion?
But see, Nikun, again, so I'll just go back to the point, for the 100 crore movie, it took long times to happen, but once first 100 crore movie happened, in next 5-7 years, you had at least 10-1500 crore movies. So I think this is what happens to even markets and economies and all those things. So it might have taken so long to get a $100 million market cap once, but I think, you will start seeing many more coming over next 5 to 7 years. But coming back to, the point you mentioned, absolutely, I think, ultimately you can all discuss intellectually, but you have to really take action and where to make money. And I do believe that India is in a very great spot over next 7-8 years, and to benefit out of this, you have to buy, and take your exposure to the stocks which are aligned, or sectors which are aligned to the economic recovery or economic growth of the country. And banking and financial services, I have been long saying that is one of the biggest part of that, and will always be there, and will be a big value or wealth creator. In that you mentioned that I don't know whether HDFC Bank has been matured or not. I do believe that these institutions, can become much bigger than what they are today. There's no doubt in my mind. It's just that it at times becomes very difficult to, sort of predict in mind, how will it happen. But same thing, a lot of people used to say for IT companies, I don't think anybody gave any chance for TCS to become $100 billion market cap company even in last 5-7 any time. And people thought that it is a matured business, it will not grow, but it has happened and it has found new kind of growth engine now. So I think you will see things changing. Definitely, I think domestic consumption is a very, very big theme within that, and it is going to last for long period of time. So there I would strongly believe that there are opportunities to create big wealth over next 5-10 years. And lastly, I mentioned that the segments, if you have to take a little bit of risk and a little bit of contrarian approach, those segments where the huge manufacturing capacities underutilized, they tend to give you multi-baggers in a shorter period of time, as in when the cycle turns out to be right. But you got to get those cycles right, you got to get those hypothesis right, and once that happens, you get many more opportunities. So I would say that play on India, economic recovery, economic growth,
right.
And there are many ways of playing. Through mutual fund you can play, through basket you can play, or through stock playing you can play.
Right. Okay, Nikunjan, as we wrap up this interview, Nikunjan and I have put our collective editorial might to put this very simple question across to you. Which is going to be the next $100 billion market cap company in your view?
I think Reliance is around the corner, right?
No.
So I think definitely Reliance,
is
HDFC Bank. I don't have any doubt why.
HDFC Bank. Okay. And he gave us the answer.
So I would say HDFC Bank is going to be the next one first.
Yeah, looks logical actually. Okay. So that was the easy one. But which billion-dollar company can be a $10 billion company?
I wish I could, answer your questions, but there are lots of them. I can tell you, we will have at least 100 plus $10 billion company, soon.
But I do agree, Vikas, as we thank you for joining us this morning, I do agree with Vikas. I think once a benchmark is set, then it's only a matter of time. Then it's a snowballing effect. And once a leader makes the mark or makes the change, then others follow. And it's pretty quick, actually.